Quick reminder before we jump in, this deep dive is for educational purposes only. We are not licensed advisors, and this is absolutely not financial advice.
Right. Always got to get that out of the way.
Yeah, exactly. Okay, so let's get right into it. Today, our mission is an analytical breakdown of Qualcomm's strategic inflection. And the big hook here is that starting next month, so September 1st, 2026, Qualcomm is jacking up the price on nearly all its chips.
Yeah, pretty much across the board.
Right. And for their premium flagship processors, they're hitting buyers with a really steep 10 to 15% price hike. But the wild part is they aren't raising prices because their chips are in some kind of, incredibly high demand.
Right.
They're doing it because of a crisis happening in an entirely different part of the tech world.
Yeah.
I mean, it's exactly like Ford raising the price of a V8 engine because the global supply of rubber tires dried up. You can't sell an engine without a car, and you obviously can't build a car without tires. So to make up for selling fewer engines overall, you just jack up the price of the ones you do manage to sell.
That analogy actually hits the nail right on the head. And if you look at Qualcomm's recent Q3 earnings report, I mean, the numbers tell that exact same story.
Okay.
They just reported a 20% decline in handset chip sales.
Wow, 20%.
Yeah, and a massive 25% drop in net income.
Oh, man.
Yeah, and the root cause driving both of those brutal financial hits and, these new price hikes is a severe global memory chip supply crunch.
Wait, hold on. Qualcomm makes the brains of the phone, right? Like the processors.
Right, yeah.
They don't make the memory. So if someone else's memory chips are out of stock, why is Qualcomm the one taking a 25% net income hit?
Well, it's because of how fragile the smartphone supply chain actually is. Think about the smartphone makers, the OEMs.
Okay.
To build a functioning phone, they need a processor from Qualcomm, but they also absolutely need memory chips.
Right.
Specifically, they need DRAM for short-term working memory and NAND for long-term storage.
Got it.
So if there's a global shortage of DRAM and NAND, device production just physically stops.
Oh, I see.
And if they aren't building phones, Qualcomm's processors are essentially left stranded on loading dock with, no device to actually power.
Wow. Okay, so an upstream memory shortage directly kills Qualcomm's downstream sales.
Exactly.
That perfectly explains the 10 to 15% price hike, too.
Right.
Like they're selling fewer chips overall, so they have to squeeze more profit margin out of the premium chips they can actually sell just to protect their bottom line during a low volume period.
Yeah, it's a defensive maneuver, but the real story here is how they plan to go on the offensive.
Right, the pivot.
Yeah, they're stuck in this smartphone supply chain trap that they fundamentally do not control. So to regain control, they are trying to completely escape the declining handset market and pivot straight into enterprise data centers.
Which brings us to their strategic escape route. They just did a $3.9 billion all-stock acquisition of Modular AI.
Yep.
And when I was reading this, I was thinking, why is a hardware giant buying an AI software infrastructure company? But then I saw the bold financial objective tied to this.
The revenue target.
Right. Qualcomm is targeting $5 billion in data center revenue next year, in fiscal 2027.
And hitting that $5 billion target is entirely dependent on modular. Because right now, the AI data center market is basically a walled garden guarded by entrenched hardware competitors.
Right.
It is incredibly hard to break into because developers are locked into writing code specifically for those incumbent chips.
I see.
If you want to use a different chip, you literally have to rewrite all your software.
So Qualcomm is trying to fight a hardware war using a software weapon.
That is the big realization here, yeah.
Yeah.
Modular provides a hardware-agnostic software layer. It essentially acts like a universal translator.
Oh, wow.
It means developers can write their AI code once and deploy it across different chips, including Qualcomm's, without rewriting anything. That software layer is the only thing that makes Qualcomm's new data center hardware viable against the established players.
That makes total sense. If developers aren't trapped in one ecosystem, Qualcomm actually has a fighting chance to sell their hardware.
Exactly.
So looking at this analytically, giving it a verdict, how do you grade this strategic inflection?
I give Qualcomm's strategic positioning a solid 7 out of 10.
A 7. Okay, what cost them those 3 points?
Well, I heavily commend the long-term pivot to data centers.
Right.
And, using their aggressive pricing power to defend gross margins right now is very smart.
Yeah, for sure.
But you have to deduct points for the massive short-term execution risks.
Oh, because of the timeline.
Exactly. They have to survive this ongoing memory crunch and bridge a huge revenue gap before their new data center chips actually enter commercial production in 2028.
Oh, wow.
Yeah, and 2 years is a very long time to wait for revenue in the tech world.
It really is. I mean, they're basically trying to outrun a hardware supply chain crisis with a software-led pivot.
Yeah.
So, if you're wondering how this affects the tech you use every day, think about the massive infrastructure running all our AI tools. Which honestly brings up a really provocative closing thought for everyone listening.
Yeah, what's that?
If Qualcomm's modular software successfully breaks the industry's reliance on closed AI hardware ecosystems, will it permanently democratize data center infrastructure? Or will it simply ignite a margin-crushing price war in AI inference?
That is the question.
It really is. Something for all of us to chew on until next time.